In today's show, we're joined by a very special guest, a friend of the channel, Erik Krown. Will be discussing, is this still a super cycle? Are we still in track to play catch up to where we were in the previous cycle? Currently, we're following the pink trajectory. We've seen some action in the crypto markets, a lot of excitement coming back. And the question remains, is this a bull trap in the short term? Was this a bear trap on the high time frame? Now reclaiming some key levels, are we going to continue higher? What exactly is going to happen next? So smash the like button, hit the bell notification, and subscribe to the channel, and we'll get straight into the show content, because we've seen a shift, right? A little bit of a shift in the market sentiment. Definitely some exciting things going on, but is it enough? That's the question. Can bulls take the reins? I'm still a little bit on the fence over here, 50-50, fear and greed coming into the neutral territory. We said if that does happen last week, expect that that's going to push Bitcoin and crypto into the greed environment, which is exactly what's happened over here. We have the fear and greed index for crypto now at 67, right? And we're still coming off relatively low volume with a lot of important things coming up economically in terms of the economic calendar, right? The first and most important thing that we need to pay attention to, which could bode as a little bit of a catalyst coming up today, is the non-farm employment change, right? Have a look out for that number. If this comes out worse than expected, of course, this could create a little bit of a catalyst, since we have the stock market directly coming into resistance. This is where we said we're looking for the trade setup in terms of a potential short trade. Remember, we're looking at the RSI over here, which we haven't got a daily close yet, so it hasn't broken the trend line yet. This was first coming off of that bearish divergence, and we paid a special attention to the volume in the stock market. And you can see the rally coming into resistance over here off of relatively low volume declining could be a warning sign that there is a possibility for a bull trap. Remember, this is about risk to reward, right? It's not about getting emotional with the market. It's about risk to reward. You have a simplified stop loss that would be placed above that previous lower high, and you'd be looking to enter into this 200-day moving average off of low volume. If it were to reject, this is the exact place that it would reject. Why? Well, the other reason is we also came directly now into the golden pocket, right? The 0.618 to 65 Fib retracement level. We said we need to see the stock market above 5,700 to start to establish a more bullish environment. We need a consolidation above that level. If we do get that, then you can say that the bulls are probably starting to take over, and we can look at higher prices in the days, weeks, and months to come, right? Therefore, confirming that this would have all been a massive bear trap. But in the short term, you could face a possibility of a bull trap over here, right? As we do witness the daily exchange volume with the 7-day moving average declining, lower lows and lower highs, still turning the corner over here towards the downside. We have not bucked that trend yet, and we need to see new money coming onto the exchanges to shift that. Looking at Bitcoin and the entire trading range taken from the origin of this move over here, that was when we were pricing in Trump coming into his administration taking over, of course, to win the election. This is where we've based our volume. You can see that the high volume node over here and the points of control is exactly where price is currently capped. And this is the exact zone as well, similar to the stock market, where we said if there was going to be a bull trap in the short term, this is the environment that it would happen in, respecting the parallel channel towards the downside. Volume declining. Remember, the 7-day daily exchange volume has been a very, very valuable guide in terms of the lifeblood of the crypto market, right? Until that comes back up, we have to take things with a pinch of salt. So coming directly as well into that golden pocket right there at 97,176, you've literally wicked into that region. You could have taken a very, very, very quick short trade over there with a stop loss hanging above this region over here at $99,713. And that's a sensible hedge, right? In the event that we do get a pullback. Now, I do believe if we do get a pullback over here, you probably are going to still put in a high low, probably around that $85,000 to $89,000 region. And then bulls most likely take control at that point. But in the short term, could we get a bit of a bull trap here, right? We have the bear moon. We'll ask Krown about the bear moon as well in just a moment. We know that it's his cup of tea. But is this going to be a failed bear moon? That's the question, right? I guess this is where it all comes into play. And without further ado, let's bring on none other than Erik Krown. How's it going, bro? How are you doing?
It's good to be here, man. It's absolutely good to be here. I feel like it's been a long time coming, man, because you and I have known each other since what, 2018? Something like this?
Yes, it's been a while. I always share this with the audience. Fun fact, guys, at one point in time, I would say at least half of everything that I knew was due to Krown, right? Because I used to be one of his first viewers. I think at the time, honestly, you only had about 7,000 subscribers when I first started to watch your show. It was way before I came onto YouTube. That was back in 2017 and leading into 2018. So full circle, amazing to have you here.
Hell yeah!
You obviously have a course with us as well, which is amazing. A lot of the Banter fam have done it. If you haven't, guys, I absolutely recommend it. But let me know what your thoughts on the market. I'll bring your screen up. I want to know your thoughts on the bull moon, bear moon. We can have a look at some of the odds of how successful they are in terms of playing out. We can have a look at the accumulation distribution curve, like where you kind of think we are in the cycle. Are we going to play catch up to, where we were at the similar times in the prior cycle, which would mean that, we should actually theoretically be going parabolic at some point. Is that on the cards or not? So I'll hand it over to you over there. Your screen.
Right, yeah. So I guess I should probably go over my just general thoughts on this cycle, for now. And in my opinion, things are changing around in this cycle for Bitcoin just as an asset. It's acting differently. It quite literally is just a different game now. You see these very long form consolidations on the way up. It's acting a lot more like a traditional ETF, whereas prior cycles were just, one massive bazooka to the upside with really no major pullbacks along the way. And if they were very short lived. And in this case, we have something completely different here now, three times throughout this current cycle where we've seen, prolonged consolidations. And honestly, this is a good thing long term, in my opinion, because it does mean that while, yes, upside gains for Bitcoin from cycle to cycle are going to become, less and less, it's going to be diminishing returns there. There will also be diminishing returns for the downside as well. And I suspect that, in this next bear market cycle, we're not going to see the traditional 80% downside move. Probably, I would even be surprised to see like a 65% or more downside move. I think it's going to be somewhere between 50 to 60-ish region, more or less. And you're just going to get these sort of, moves up, consolidate sideways, same thing. And it's just going to be like a boring ETF, which honestly is a good thing. Now, as far as this cycle goes, I do think that we are getting tangible evidence that things are, different this time, in the sense that the timing of this cycle, I do think, is a lot more likely to end sooner than what I believe a lot of people are ready for. Now, again, when I say end sooner, I don't think it's going to be as big of a drawdown, and I do think that the next upside move from the next cycle low is probably going to be a faster time schedule as well. It's just you're going to see less and less of everything, essentially. But as far as the cycle goes, I am getting a lot of tangible signals that the timing of this cycle is probably ending, I think relatively soon. And when I say relatively soon, I'll put a date on that between, let's say, what is the next 2 months? Is that July? Does that bring us to July? Yeah, July. It's somewhere between July to maybe end of September, somewhere around this region. I do think is very, very high probability. So I can bring you through a few charts here. I actually wanted to start off with something completely different that I've not shown on even my channel. In fact, I got to give credit to one of the guys in my own Discord, 𝗙knight, for showing me this. But a lot of people are very obsessed this cycle with the money supply chart, right? That's the one that's the most bullish. Everything's going to be going to the moon and beyond, and yada yada yada. There's a lot of problems with that, to be honest. But when we look at it right here, we look at Bitcoin versus the money supply. We can see something that I think is quite compelling. We can see that on the bi-monthly time frame, any sort of downside cross on the stochastic oscillator has correlated pretty much perfectly with these highs. Now, of course, we don't have evidence for this first cycle over here. Unfortunately, it was a little bit too new, but I do put some weight on this. And more importantly, with the bi-monthly stochastic oscillator already within this critical zone, how much longer can it stay up there without, having to be forced to cross down? I would imagine, again, somewhere between 1 to 2 more periods, which would, again, bring us, between about July to end of September. I do think that kind of makes sense. On top of that, if we go over here to the accumulation and distribution indicator, I've actually had a relook on this one as well. I really haven't been bringing it up on my channel in a very long time now. But the traditional way that we've been using it is just anytime we see a downward slope emerge, that has been, the end of your cycle. If I go ahead and plot all of the downturns, meaning that the slope went from a positive slope to a negative slope from these sort of critical regions here, anytime that that's happened, again, on the bi-monthly time frame, that has essentially been your traditional bull trap for the cycle. In fact, the highs were already in, and it was just actually downside only after that. Now, personally, I do, and I want to be really, really clear about this before people start like throwing shit at me, is I want to be super clear. I actually do think that Bitcoin can make a new all-time high. I just don't think it's going to be super high compared to what we already have. I think maybe 120 to 125,000 at most, and I'd be very much open to Bitcoin already having the high end. But as far as that goes, I mean, that's effectively the high, so to speak. So looking at the bi-monthly, we do see that this current cycle has seen the downturn right on over here. This was coming off of the March closure. So it's not necessarily the bull trap, because obviously Bitcoin hasn't necessarily come down from there. It didn't even close red as all these other prior ones have. But it's, again, another warning signal that, hey, this is getting distributed within these regions. And, you do expect people to sell into strength, of course. And this is, and this is that scenario. But again, it's just another piece of the puzzle. Now let's move on to the next chart. This is going to be just a clean look at the monthly stochastic oscillator here. And I've noticed that there's a very specific pattern for Bitcoin from cycle to cycle. Anytime that we see the stochastic oscillator on the monthly time frame cross the downside, and it is below the critical zone being at 80, this has correlated with, again, end of cycle type stuff. And I found that it's usually the second cross to the downside, especially on bearish divergence, that has been very accurate in getting cycle highs. And you can see the same sort of relationship right here from prior cycles. So if we go back to, of course, 2011, there wasn't really a bull trap, so it just got the high essentially right here. But if we go to the next cycle from 2013 to 2014, you can see that first cross down, that's not the selling point. The second cross down, however, right here on bearish divergence, price did rally a little bit from there. Yes, I mean, not even a little bit. It did actually rally like a pretty decent amount from this low. Let's see. Yeah, about a 57% rally. But again, that was your signal that long term, the market was done and it's time to be looking for selling opportunities. Same thing over here. We have a quick cross to the downside right here on the way up. And then the second one, again, below that critical zone right here. And that was effectively your bull trap as well. Same thing over here in 2021, first cross down, that was your correction in the summer. Second cross down, that is leading into your bull trap, which again was a 50% move from that low to the next high a couple months later. But again, that was a selling opportunity, not a buying opportunity for the long term. And then what do you know? We have the exact same setup right here as well for this cycle. We got the first cross down. That was coming into the beginning of the last mega consolidation from last year. And now we have the second cross down on bearish divergence. Again, Bitcoin has rallied from the lows here like pretty decently. If we put a number on this, I think it's somewhere around 31% or so. I do think that things can trade a little bit higher, maybe even make a new high as well. But this is more than likely, at least in my opinion, a signal of things coming to an end relatively soon. Now we can take this another step forwards as well. I'll bring you over to this chart. This is the bi-monthly time frame, looking at the stochastic oscillator, kind of smoothing things out over an even higher time frame. Again, all crosses to the downside have correlated essentially with the market highs, whether they were exactly on the highs or maybe a couple of candles before the highs. I don't think that really matters. Again, we do have, concerns over here. It is still crossed to the upside as of right now, and it will remain crossed to the upside as long as Bitcoin's above $89,000 on this next period closing, which closes at the end of not this month, but the end of next month, which is what, June? Yeah, at the end of June. Assuming Bitcoin can stay above $89,000, still keeps the 𝗪𝗏 hopium alive. But my point is that you can imagine when you get into critical regions like this, it just becomes more and more difficult to keep that momentum up. Thus, a downside cross becomes more and more likely. So that's where I'm kind of getting this next 2 month to 4 month spread essentially for looking for a major high, if not maybe already in. On top of that, we can go over here and we can also reference that the bi-monthly time frame will naturally have some bearish divergence on the bi-monthly RSI. This one will actually have 3 major drives coming in from the highs of 2017 connected with the highs of 2021. And I mean, unless if the RSI gets literally above 90, relatively soon, there will be certainly bearish divergence at some point. I would imagine within the next, few periods of closing, it almost must get confirmed in a sense. In fact, even there's a little bit of bearish divergence here between the 2024 high. And of course, what we've seen early on within this year as well, that's a little bit less of a concern. I'm really actually concerned about this more long term. And then of course, that can be extrapolated to the 3-month time frame, the quarterly time frame. And same thing here as well. You know, this one is going to have bearish divergence at some point. Can it continue up a little bit more first before that, you know, actually gets confirmed? Yeah, absolutely. That's why I'm definitely open to, you know, a new high. I just don't think it's going to be that crazy. And we can go even further. We can go over here. So here is just a quick analysis of the monthly RSI. And what I've done is I've measured the amount of time that the monthly RSI stays above 70, obviously during bull markets. And I found that, first it enters above 70, and then I'm measuring to the point where it actually comes back down below 70. And what I found is all of these prior cycles have basically been the same timing. For 427 days right here, when it came down 70 officially, you know, your highs were already in actually. Same thing over here, 457 days, basically the same thing. Again, you know, once you came back down below 70, that was effectively the end of cycle. Same thing over here, again in 2021, almost 400 days in that vicinity, and again coming down below there actually was perfectly the high, I should add. And then we have this cycle, which thus far has spent almost 400 days as well in that critical zone, and has come back down below it. And you know, if history is anything to go off of, which usually it is, not always, and these are all models that are prone to failure, and at some point they will fail for sure. Just to address some counterpoints here, but you know, until it fails, personally, myself as a trader or as an analyst, I'm always going to go with something that has a higher probability to happen. Higher probability doesn't mean 100% probability or anything like this, obviously. But if I'm going to be a betting man, which, you know, we all kind of are in a way, whether you're a degen or whether you're a professional trader, you know, you want to be playing the odds, generally speaking. That's why, you know, it's very powerful to be the house when you are owning a casino. Anyways, I think that actually is pretty much the extent of the major charts I wanted to look at. I mean, I can show you one last thing over here as well.
I just wanted to run back to something that you said, which is very, very interesting, because it's in alignment with what I'm seeing. You said, you know, probably maybe 2 more months max, and a very simple chart that any, you know, retail individual could also look at and pull up themselves. That I'm looking at is this one over here. Let me just quickly get yours off and we'll put that on. So I'm having a look at this over here as well, which is, of course, just a simple trend line governing price towards the highs over there. And then we have the RSI, which has been coming down. It's exactly what you said. It's just pretty much across all major timeframes that momentum is weaning off. It's starting to lose steam, right? And you got this massive bearish divergence where even if price were to come up over here, it's going to start to print that triple bearish divergence with price moving up over here. And if you run that trajectory, you know, that would take you to about $125,000 to $130,000, and then you're going to hit this trend line anyway. And that's going to meet with the RSI at a similar point in time, also probably hitting that, and then you're getting that loss of momentum over there.
Yeah, that's your third one.
Therefore, I think at least my message has been clear to the audience. I'm very transparent with exactly what I do when I'm all in, when I'm all out. And I've been 100% cash, only looking for shorter term trades ever since we broke that range down, right? Once we started to consolidate and create a little bit of an order block at $92,000, we avoided this entire dip. We then went long from $81,000 to $83,000 to current levels. I guess anyone can continue to hold that. I'm back in cash, obviously, since it's come into the exact zone where I said I'd be looking for, if it was going to be a complacency bounce leading into new lows from here. Well, this is where I would expect it to happen. But I guess given the momentum that we've come into the market with on this recent move over here, I also see a world where you probably still could create new all-time highs. But timing is more important to me than anything in the cycle, because, you know, that's probably where you're going to make the most gains, right? Is realistically is when you're going in hard at the lows where everybody knows that it's a bear market. When you're in this, you know, environment where I know that you also know 𝗪𝗪𝗪𝗪, where he uses that word liminal space, right? When you're in this world of liminal space where it's 50-50 of who's going to take control, and the psychology is really beginning to shift. There's not a definitive trade there where you can go in heavy, right? You have to really be specific about your calculations on your risk to reward, and risk very, very minimal. And I guess for the remainder of the bull run, I've said that, you know, at best, we're 70% of the way through this bull run already. We may even be at the end. We may even be, this could have already been the top if we do put in that complacency bounce and reject. But again, given the momentum that we have over here, I do see a world where you could continue towards the upside and possibly challenge this trend line over here. But I guess I want to ask you, what do you think that means for altcoins? Because we're in this environment where we've just bulldozed through on Bitcoin dominance. I'm looking for a bit of weakness coming into 66 to 69%, this pink box over here, which is simply between the 0.786 and the 0.886. Is there a world where possibly Bitcoin does rally up to here, reject, and then like slowly come down in some sort of a controlled fashion, while if you can have such a thing, while the Bitcoin dominance breaks down and you have this like face melting altcoin rally, because there hasn't really been any sort of an altcoin season. With that question, I guess I would also like to say that, of course, for me personally, I'll be tracking this chart, and I'd actually want to see new money coming into the market, which means you'd have to have, you know, an environment where Bitcoin is consolidating or coming down slowly, and new money is coming into the market with the market cap increasing to drive altcoins for like a final liquidity grab. Like, what are your thoughts on the altcoin sector then?
Yeah, absolutely. It's a big question that people love to talk about. And, you know, I get it. People love to talk about altcoins because the idea there is you can make a shit ton of money. Like that's basically it. It's complete greed, which is fine. You know, you can make a shit ton of money. But one of the things that I think a lot of people have gotten wrong this cycle, and by the way, I do agree that with you that Bitcoin dominance probably goes up, you know, very high 60s, maybe low 70s, something like this. But one of the things that I think a lot of people have gotten wrong this cycle, and hey, I'm open to being wrong as well. Like it very well might blow up in my face. But one of the things that I think people got wrong is that they don't think that altcoin season happened because their shitcoin didn't pump. Whereas every cycle, it's actually not been every altcoin that pumps to the moon and beyond, making new all-time highs. Yes, they do get big bounces, absolutely. Big percentage-wise bounces. You can make a lot of money on that, but it's not like 10x to new all-time highs and shit like this. If you look from cycle to cycle, starting from 2017, it was always one sector that was the hot sector that got, you know, the love. And in 2017, it was, of course, ICOs. We all know this. Then 2020 comes around, we got DeFi. Then 2021 was NFTs and DeFi again, I guess. And then, of course, in the most recent cycle, 2024, well, what was hot then? Memes went to the moon and beyond. They certainly had a fucking alt season. And then the AI narrative as well, same thing there too. You know, all of the things in that sector did really, really well. Whereas everything else pretty much, you know, acted as you would expect. They had big bounces, yes, tradable bounces, absolutely, but not making new all-time highs, not doing anything like this. And the same sort of cycle continues to happen from cycle to cycle. People get caught dead holding these damn dead altcoins, thinking that, you know, because they had a big bounce, they're going to continue back to new all-time highs and shit like this. It's very, 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 very unlikely that that any altcoin makes new all-time highs from cycle to cycle. It is the exception to the rule when that happens. And really, you know, we can only think of a handful of names that even do that outside of, you know, the big market cap coins. And even then, I mean, Ethereum hasn't even made a new cycle high. So, you know, it's no guarantee. And I think that those sort of easier days are done, especially as the space matures. And of course, you know, I've been hearing another theory recently that we're going to have fundamental season for alt. Maybe that's going to be like the last narrative for this cycle. Definitely possible. Again, I'm open to this. If Bitcoin were to go to $120,000 or $125,000, yeah, I would certainly expect one of the sectors to absolutely explode again. But it's same thing for all of the rest of them. It's like, yeah, they're going to get big bounces, but I'm not looking for them to make new highs or probably even get anywhere close to their all-time highs. So that's the game as I see it. Again, I might be massively wrong, but you know, I think that we have seen alt season already.
Sure. And then there's this narrative going around that Bitcoin is decorrelated. It's now trading, it's trading like gold. What are your thoughts on this? Has Bitcoin, at what point do you say Bitcoin's decorrelated from risk on assets like the NASDAQ or the S&P 500?
Yeah, this one drives me wild.
How long do we have to deviate from that trend to actually consider that?
Yeah, to be honest, man, the decorrelation stuff, it's like, do you have fucking eyes to see for yourself? Obviously, that's not true. Obviously, it is not decorrelated. Where people get this equation wrong is that they're looking at the 5-minute time frame and they'll be like, oh my God, Bitcoin just had a 5-minute upside move and SPY had a 5-minute downside move. We're decorrelating. Holy shit, it's happening. No, Correlations should be measured over long-term trends. That's where you can actually identify a real decoupling if it's going to happen. And probably at some point we will see Bitcoin decouple from traditional markets, but it hasn't happened yet. And again, with the way that I think, it's like, okay, yes, it probably happens over a long period of time, but in the short term, I'm not going to bet against that until I'm proven otherwise, meaning that I will be wrong at some point for that. But still, these things have not decorrelated. It's very, very obvious. I mean, holy shit. If anything, you'd probably want to be correlated to traditional markets just because like they just go up.
Go up.
They go up. And that's what I'm saying with Bitcoin becoming more, trading more and more like an ETF. You know, it is becoming, you know, very, very similar. In fact, I just put on a daily time frame here. This is NASDAQ. This is Bitcoin. It's like, is there much of a difference? Not really. No, they're both operating on these significantly lower highs in sort of bull trappy territories. Again, I do think that this market can make new highs, but you know, they're more or less in the same area. And more importantly, they're following the same trend. When did markets bottom? Bottomed in the first week of April. When did Bitcoin bottom? First week of April. When did NASDAQ bottom? First week of April. This is what matters. It's not the 5-minute time frame. It's these longer term trends. And we really wouldn't even be able to fully validate a decoupling, you know, for Bitcoin from traditional markets, at least for like a few months, honestly. You know, I'd want to see that trend really persist through different times. And then I'd be like, okay, yeah, you know, these things have decoupled and hopefully they're not inversely correlated, just decoupled, you know, that would be good. But, you know, for now, we just don't have that evidence.
So what are your thoughts on the S&P 500 or the NASDAQ over the coming weeks and months? Are we, when you come to Dubai, are we buying Lambos or Nissan Sunnys?
Yeah, man. So traditional markets, I think, look a little bit more obvious here. It's in like a very, very precarious place because if you are bearish and you're looking for a bull trap, you're basically looking for anywhere between kind of where it's at right now, because it still does have that lower high, and perhaps even all the way up to like 6,000 for SPY. That's a big area to cover. This is the wall of worry, essentially. Again, it's not impossible to climb the wall of worry, but you should be defensive as long as you are below that wall, because, well, that would be the perfect place theoretically to put in a mega bull trap. Now, again, full transparency, and I'm a lot more happy to talk about my stock market investments than crypto. But, you know, I did buy a lot down around here, and I was very, very loud about that on my YouTube. Same thing with Bitcoin as well. But these are for very, very long-term holds for anyone who's listening from my channel. These are for, you know, 5, 10, 15-year long holds. So I fully expect to be, you know, underwater on these, you know, if things turn around here, obviously. So for me, you know, this is kind of a scary area. Yes, things are kind of looking good right now, but you have the traditional market setup where things are rallying into the next economic event. We have some sort of economic event coming up later today. I believe you referenced it at the beginning of this video, and that's a perfect time to you know, to run away.
Yeah, we have the US non-farm employment change, which is coming out. So we'll see, because this always affects what the Fed's going to do next. And then I think Jerome Powell literally speaks next week, and we know him and Trump aren't that friendly with each other at the moment. Maybe he'll have like one last gut punch before he gets fired by wrecking the markets. We'll see what he does. Yeah. But I do think that also monetary policy, if it shifted into more loose monetary policy and brought in some form of quantitative easing, that could probably get things going. But a lot of pain can be caused as well before that actually takes place. So I know that you work predominantly off of a trading system, and I'll just quickly screen share over here. So can you tell us a little bit about your course, what you've built with us? Guys, it's not $2,000. If you use the link in the description below, which I highly recommend, you'll see over here, it says Krown School. Click that link, sign up, because he actually does have a cohort coming up in 4 days and 5 hours. I see these are some of the modules that you've created. So I know you predominantly look at things like volatility and momentum, quite similar to me. Yeah. Do you teach people how to also create a trading system? Because that's vitally important to reach, you know, progression as a trader. We always start as like degenerate gambler. We don't know what we're doing. We just throw money and hope for the best. It's red or black. And then eventually you start to do a little bit of manual trading, and you come up with a little bit of your own ideas and system. And then I think that, you know, for the final form, super sane final form, is I guess where you get to some form of automated trading. Is this what you discuss in your particular course?
Yeah, man. So the purpose of my course is to, one, give people a framework of how to actually develop a strategy, And then 2, we just go through my own example of sort of my model of price action, which is a very generic model of price action that essentially can be applied to any asset, any market. You're going to need to make tweaks and all these sort of things. But basically, we give you the spoon feeding sort of template to work off of if you have no ideas. And then, of course, for the people who might be more experienced, well, we go over how to actually develop a strategy that will work for you. The big thing for myself is that all trading that is not done under a predefined objective strategy is doomed to fail over a long period of time. If you don't know exactly when to enter, why to enter, and when to exit, of course, and this is, again, not predefined and it's not objective, meaning that, it's coming off of like, oh, I got a trend line break over here, or, oh, so-and-so is saying this on TV. It doesn't fucking matter because you cannot plan around that. You need to be able to use and reference something that is a truth. So that's why I like to use indicators that have values. Again, indicators obviously can fail. They obviously can lie. There's a lot of noise in there, of course, along the signal. But if you don't actually create a strategy around that, you have no way of testing it to know if your strategy even works over a long period of time. So that's the big focus of that course, is to just give people the tools to actually create their own strategy, and then also give you, a template strategy as well to work off of, if you have no other ideas or no other experience, it's fine to start with, of course.
Cool. Amazing. No, it's an honor and a privilege to have you on. Thank you so much for joining.
Likewise, man.
Congratulations on what you've built over here. It's absolutely incredible. I have gone through some of the modules that you've done. I think it's amazing. I really encourage every single person, if you haven't done his course, do it, guys. It's like adding another notch in your belt and your trading tool set. You guys will figure it out over time. The more knowledge you have, the more power you have. You need to go through this course, sign up using the link below. And you don't have to pay the $2,000, of course, and it's absolutely free. Krown, yeah, thank you very much for joining. Honestly, appreciate it. I would love to have you back on. Maybe we'll have you back on in like 2 months.
Sure.
And then we can see where we're at, because maybe we're at 125K, and then that's where all the euphoria comes back. And that's ultimately the final take profit zone. So I think that, maybe just to summarize, I think what we probably both agree on is that in the short term, there is a little bit of momentum on the bull side, but this is exactly where you'd expect a bull trap to occur if there was going to be a bull trap. If there isn't a bull trap, then we're looking at continuation, maybe a push a little bit higher into all-time highs, but leading into the medium to high time frames, it's probably more a trader's market than a long-term hodler investor, if you want to use that word, a hodler in crypto or in Bitcoin. Specifically, cryptos we're not even going to talk about yet. And we'll reevaluate if Bitcoin dominance gets into that, around 70% region and start to put in a rejection. Then we talk altcoins again. Thank you very much for joining.
Absolutely, man. Thank you so much for having me, man. It's really been a pleasure, and looking forward to speaking again soon.
Amazing. Have a great day. Guys, we'll catch you on the next one. Thank you so much for joining. Smash the like button, and I will see you all soon. Have a great day, and cheers for now.